Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market, and I am your host, Kevin Horner, joining you from a beautiful Denver, Colorado, of course. Today, I am lucky, very pleased to be joined by my friend and fellow Schwab coach, Rachel Deshelle. Good morning, Rachel. It's great to see you. How are things today?
It's a great morning. Great to see you as well. It's been a while, Kev, so I'm happy to join you this morning.
Yeah, you're right. It has been a while. Pretty consistently had you on the show back on Mondays and a good rotation. But since we had you join the team, it's been a little less frequent than both of us would like. So really, really happy to have you here on what is, of course, FOMC decision day. So we've got plenty to cover. Have a feeling it might be a little muted this morning in the way of market action heading into the 2 p.m. announcement. But nonetheless, we're going to try and set the table for all of you. We are joined by James Boyd this morning here in the chat. So make sure you say hey to JB. He's going to get to comments, questions that Rachel and I are unable to. But you know we want to hear from you. And we are commonly bringing those comments and questions into our discussion. So please feel free to keep posting in there for the duration of our show. If you're not already doing so, please follow the three of us on X, James Boyd CS, Rachel Dash CS, and Kevin Horner CS. And without a doubt, on X, it's the best way to catch up with us coaches when we are not hosting classes for you here on the channel. So with that, let's get to our disclosures and we'll dive right into things, everybody. First of all, remember, our conversations are exclusively for your information and your education. We do not make recommendations. We do not make endorsements for any specific approach to trading the market. We do, however, discuss technical analysis. We remind you that this is merely one way of analyzing the market. We discourage you from basing your decisions exclusively off technical analysis. And our agenda will continue to remain the same. We approach the market with this top-down methodology. So we'll hit up the biggest of our indices, the S&P 500, the Russell 2000, the NASDAQ 100, semiconductors, touch on a few of those sectors on the move as usual, some stocks in the news, and we'll go with that. So plenty to touch on for you. So let's kick it off, Rachel, as we do with the S&P. The thing I've taken away more than anything else, I think, is the fact that we've held this little gentle uptrend for the last 2 weeks after breaking that downtrend line. So it feels like a little more of the same, even though we're not yet making new highs.
Exactly. That's kind of what I'm seeing as well. We obviously had a big move off of that support right around 6,500 or so. And now it kind of makes sense that we've been just kind of been trading in almost like a sideways pattern for the last week or so, just kind of digesting some of those gains from that previous week. So almost looking like a possible bull flag pattern kind of stacking up here with the S&P 500, but we're probably around 1 percentage point away from all-time highs. So it'll be interesting to see, based on the announcement today and kind of the reaction from the Fed speak, to see if that kind of pulls us up towards that prior resistance, those all-time highs.
Yeah, sure would. I mean, obviously, we're going to need, to some extent, some not just the cut that's expected in terms of how the traders are positioning for today. There is a very high expectation for a cut. I'm using expectation in lieu of likelihood, two very different terms there. But one, the expectation being that's how traders are positioned. So they are expecting a 25 basis point cut today. But I think, Rachel, the more important thing might very well be the commentary after the fact, expectations for the cut, etc. Anything you're hearing on to that extent specifically?
Yeah, so I think that's going to be something that they're definitely watching, especially like into 2026. I know kind of hearing about like less cuts going into 2026 and things like that. So it'll be interesting to hear what they have to say, how the market reacts to it. Obviously, we do have a little bit of put buying today, just with the VIX kind of going up a little bit, up 3% this morning, kind of leading into the announcement, kind of bouncing off that prior support right below 16 or so. So there is obviously some type of bit of uncertainty, some type of kind of protection planning in this case with around this announcement.
And you think that I like how you positioned that. You basically said a little bit of protective effort here by the SPX traders. And in fact, I think a lot of traders would actually look at this as more optimistic than anything. Would you? The idea being that if the VIX is elevated, they're holding longs, protecting profits as compared to exiting longs, moving to cash, which would be far more concerning.
Exactly. I mean, the VIX still is at a pretty, I would say almost muted level, not necessarily muted, but it's still well below 20. So it's not really showing any fear in the market. It's kind of more a protection trade as of right now. We basically have, I mean, this main Fed announcement on the horizon. We're pretty much through earnings season and things like that. So yeah, not fear-based in this case, and more protection-based and just kind of protecting some of those longs. And we're probably seeing that as we're seeing money kind of rotate from sector to sector too with the last few months as well.
Okay, cool. That's kind of the assessment that I had with this a slight elevation in the VIX over the last 4 days, but glad to hear that that it's shared by you as well. One thing I wanted to look at as it relates to the SPX was just that hour-long chart. So everybody knows I'm a big fan of trying to fine-tune signals for these major indices. If we change this to a 1 hour chart, you can see we are in the process right now of kind of breaking that trend that I was talking about. This is my downtrend line, and then everything that's happened since the break of the downtrend line, we're just violating it as we speak. So, this is giving us maybe the little semblance of short-term weakness leading into the announcement here, but we're at a spot where hopefully we could start to see a bit of a bounce. Not too much of a shock, but I will say, again, you called it out. It kind of looks like a bull flag after having moved through that level. We just don't commonly see bull flags in this type of a wind, meaning with that upward trajectory to the bottom of the cloth portion of the flag. Commonly, we see those flat or maybe downward sloping a little more commonly, but nonetheless, I think the takeaway here is the fact that we've maintained that level quite nicely for 2 weeks following the break of the downtrend. So we'll see how today's action, how we respect today's action and how the SPX reacts to it. The NASDAQ 100 looks pretty similar here, Rachel, except something's starting to poke its head out. And it's just, if I clear my drawing set, it's not so much this stuff. It's the fact that we've matched highs, and paused. So there's a concern is that we don't have an opportunity to make new highs. We clearly have some levels we can pay attention to, but we've not given us the level of enthusiastic push as of yet. Hopefully the Fed will help us today.
Yeah, definitely. It looks like, I mean, from that line that you drew from that initial gap down at the beginning of November, it just seems like it tried to retrace that gap a little bit, but seems like that gap ledge of resistance is still kind of showing that there's a lot of supply at that level. And I mean, it could be also based off of like rotation in the technology sector and some other leaders kind of taking shape here, since obviously the weighting's a little bit higher in the NASDAQ as far as technology. So that could kind of play a part there. But yeah, that real gap zone around, what is that, like 26 or 25,700 maybe or so?
Yeah, like
25,800. Yeah, that's going to be that crucial level to watch to see if we can kind of get past. But I still think we're probably, Kevin, about like 1%, 1.5% from those all-time highs. So we're really not too far from that level either.
Yeah, I know I'm splitting hairs, right? I'm being a little bit picky with the action. It's hard to be upset with a market, especially a big one like the NASDAQ 100. If we looked at the bounce here, it's been about 7 or 8%. 7% even to the level we're trading at right now, better than 7% in the bounce back. If we went to the peak, about 8.25. It's been a good bounce. It's been led by tech, obviously, to a certain extent. And then, as we'll see here, it's led by small caps. The bounce back has been really strong. Rachel, I noticed yesterday, one of your ex-posts called this out. Russell rallying back all the way to these highs. Now, this stands out, doesn't it? I put a line up there. But boy, we've got a lot of tails taking us into that 2540 level. We haven't pushed through it yet.
Yeah, exactly. It's just kind of interesting to see the small caps as that first major index to really make its way back to those all-time highs. And so, I mean, that could suggest like further rotation out of large cap, maybe into small cap, which is interesting too because of kind of the rate narrative as well. So this could obviously kind of, I guess, lean more towards lower rates for longer if small caps are going to be breaking out at these levels here. But yeah, it is just kind of interesting that that was kind of the first one to really reclaim those former highs there at that all-time high resistance.
Now, it's that said, it's made a good move. We need to see more, don't we? Because the fact is, we've come to this level. It looks very lovely, like a nice V-shaped recovery. And yet, if we can't pop through to new highs, then it might just be a rejection zone yet again. It could easily throw us back to this confluence of moving averages right in this vicinity. Our 20 and our 50 are set to potentially cross to the upside, which we would certainly take as a bit more of a continuation viewpoint here. That's what we would rather see out of the Russell. Now, the bounce back, as you said, Rach, it's been about 3 weeks now, but the reason for the drawdown was as much the inverse of what we've been waiting for now, heading into today's decision. So, of course, we sold down on this expectation that rate cuts were going to be fewer and lesser heading into 2026. Like we may not get that rate cut for this month. And that's what led to that massive sell down, essentially. And then the narrative changed. We got some notes and minutes from those Fed conversations, and it was revealed that more than a few governors felt that a rate cut was expected, that we were going to follow through. And here we are bouncing back. So ultimately, Rachel, what we've got is a lot of back and forth, no decisions, at least not until today. So we basically, all of this stuff, as I see it, this move where we broke down from the 20-day to here, and then our bounce back, all of that story comes out in the wash effectively today.
Exactly. I think something interesting too about this chart as well is just kind of almost like that slowing momentum or that divergence in momentum too, because we can see price made the same amount of highs or even higher highs, and momentum is kind of waning a little bit, making lower highs. So that can kind of give me an indication, or traders an indication as well, that hey, momentum's kind of stalling out near these all-time highs. We may get more of a resistance bounce than possibly a breakthrough, but obviously can't predict anything. We're obviously going to have to see what comes of today's announcement and Fed speak.
And that Fed speak obviously has a bit more of import as it relates to small caps, right? Lower yields, positive for small caps. Small caps tend to have higher debt loads, as we've covered here in this segment. The importance of lower rates for small caps is imperative, really. In fact, let's talk about the yields here briefly. The yields have rallied back into 4.2, which is really interesting, Rachel. If you've been watching this show quite a bit, then you know these levels that I've drawn in have been the ones I've been watching for a while. My red line right at essentially 4.2. It's a pretty significant level. We rallied into that ledge in mid-September, pulled back and tested the under 4% ledge there. And yet this rally back is not exactly giving us warm, fuzzy feelings ahead of today's announcement.
Yeah, definitely not. I mean, I've been watching that same level as well, that resistance around 4.2, because it looks like we are just completing this possible inverse head and shoulders here that we have been crafting out really since the beginning of September there. So I think 4.2 is definitely going to be that decisive level. So it'll be interesting to see kind of how rates react to a cut later today, because we know that just because they're cutting rates don't always fall in this case either. So this is kind of going to be something interesting to watch kind of into the announcement, obviously leading after. And we have right after that resistance around 4.2, you have that 200 period simple moving average that we really haven't been above since this summer either.
Yeah, it's been a It's been a bit of a development. It has the visual of a bit of like a bottoming pattern as it relates to the yield structure here. The fact that we've broken the downtrend could be putting a little bit of pressure on things. I just feel like it's probably a market reaction that says, "Hey, let's wait and hear from the Fed today." In fact, some of the concepts that we're going to be listening for, it's not so much tied, Rachel, to the actual decision as it is the commentary after the fact. So 2 p.m. we get the actual rate decision. 2:30 p.m. we get the conversation. We get this discussion out of Fed Chair Powell. So some of the things we want to listen for. We want to hear that guidance remains unchanged, essentially heading into 2026. We want to hear that because it would signal more of a commitment to the easing of policy here and to a continuation of extended rate cuts. And I think that's where we really stand, Rachel, is if we start listening to what the Fed says and it's tightening and more detail toward maybe pausing in the cycle of rate cuts or fewer rate cuts than expected, that's going to have a negative impact on the market, even immediately, because again, the bounce back we've had has largely been tied to the idea that the Fed needs to keep their foot, basically on the cutting cycle, essentially here.
Exactly. I do see a question in the chat too from Rita as far as this 10-year yield. Would you call this an inverse head and shoulder or a double or triple top? I would say, and I know traders would as well, they look for some of these patterns within the context of the overall trend. So if this pattern really isn't occurring near I guess kind of after a uptrend in price where it's forming at kind of like a topping level, then it really isn't a possible triple top or double top there. In this case, it's more forming after this kind of continued downtrend really since May. And so because of the context of it kind of occurring at the lows here, especially like these yearly lows, it would more likely be this possible bottoming reversal type pattern there, just to kind of answer your question there in the chat.
I like that explanation. And honestly, what I'm looking at, I might think that something like the Russell presents more like maybe a double top. I know there's a second peak here, but these are really close to each other. This more looks like double top at the moment. And of course, it looks that way, but that doesn't mean that's the pattern that it is, right? We often say we see these patterns setting up. The way to think about this, or the way that technicians commonly define this, is the pattern is as it appears to be this way until the pattern carries itself to fruition. So if this were a double, triple top, we would actually have to trade through the lows we have made in here, something like a slanted neckline, maybe, Rachel, something like this, which would validate this being a top. You'd have to trade below that line for that to be a pattern carried to fruition. So just that reminder briefly about what we look for and the way that we define these things. The truth of the matter, though, is, Rachel, that so much of technical analysis is really just support and resistance. We can put a name on it, but the name of the pattern doesn't matter nearly as much as just an understanding of what the pattern implies for you. Meeting resistance, is there a gap zone there, falling to support? Why did the selling stop at support? Those types of things are much more common, and we don't have to overthink it, do we?
Exactly. Yeah. It's kind of those levels that you can draw there in the sand: horizontal support, horizontal resistance. Obviously, a lot of psychological levels as well, especially with that 2,300, that nice round number there, really kind of carving out that neckline. But I mean, as far as a possible double top, I mean, even in this case, we would almost have to see this possible right shoulder or this right top take almost like that equidistant time that the left shoulder took, which was really almost like 3 months to form. So that can be another thing that traders may kind of keep an eye on, with a possible pattern kind of taking shape in this place.
Yeah, good call out there. The timing is likely. I'm always reminded the market doesn't move in my time frame. It moves in its own. It rarely does what I want it to do in the window of time I want it. So can be a healthy reminder that we don't often get exactly what we want. I saw a question here about the layout. There's a couple of ways to look at the layout. I think of the layout of Thinkorswim as all inclusive, which would mean everything that I've got loaded in the layout here, plus any other chart grids that I've got loaded and launched on other monitors. But for you, Michael, what I was going to do was just share the grid. I think that's what you're probably talking about, is my grid formation on the chart, which in my case offers 4 separate time frames: a 1 day, 1 year, 1 day, 5-minute bars with pivot points, 1 hour bars over the last, let's see, what is that? 90 days in this case, and then a weekly chart as well. And I like to navigate through them. I'll keep it maximized for y'all and then just navigate through with my arrows. I can absolutely share my grid here with all of you if you'd like that. So I'll happily share this. Please remember, these are not, guaranteed for any accuracy, and of course they're not a recommendation for your use. But grids like this can be really helpful if you're in the habit of looking through various time frames. So I'll share that with y'all there if you'd like to utilize that. And if you want to learn more, don't forget, just rely on the YouTube channel. Our Trader Talks page, everybody, is such a wonderful search engine. If you just dropped in your keyword like grids or even flexible grid, for example, layout, something along those lines, you're going to find a multitude of archived, recorded videos ready to go for you to walk you through those processes that you're looking for. Rachel, let's talk about the semis. Kicking off from the rate conversation and everything. If everything comes as dovish as is hoped, boy, we've got an interesting setup here. Now, the first thing I've got to call out, we do not have a wonderful confirmation out of the RSI. We've got a couple of lower highs. The bounce back has been good. Percentage-wise, it's been fantastic. It's almost like 20%, if I'm not mistaken. But why am I not as enthusiastic as I want to be?
Well, I would definitely agree with you there, Kevin. Obviously, we're having some of those almost like little warning signs and momentum that are kind of pulling away from what we're kind of seeing there in the trend. So that's not something kind of traders want to look at, is kind of seeing that divergence there. But overall, it is still trading above its 200, its 50, its 20-day moving average, really pressing up against these former highs here, almost forming like that same type of pattern that we saw in the Russell actually as well. Just kind of still kind of stuck at those former highs. It really seems like today's speak is going to be a catalyst for either a resistance break or resistance bounce in this case. But this could be, like, again, kind of like what we talked about before, just kind of some rotation taking place under the surface of the market too, as we push up to those former highs.
So we like the bounce back. We love the percentage bounce back. If we talk about it from the move that we've made just to where we're trading right now, like I said, about 19.5%. That has been speedy. That's fewer than 3 weeks, and we've bounced back 20% on a massive industry, mind you. That's not, it's one thing for a stock to make a 20% pop like that. It's a whole other ball game when it happens to a substantial space within the market. So yeah, it's back to new highs. Essentially, we made a high close. I think it was yesterday. Let's see, our close was 73.72. The day prior, 73.75. So it was Monday close that gave us that new high. But nonetheless, we are right at an inflection point. And again, the deep shape, the deep V aspect of this might give us a little bit of optimism. And yet, we're hanging out at resistance. So I feel like, traders, listen, if you're wanting to deploy new money, a lot of traders are going to sit on their hands and wait for a breakout. Remember, as traders, if you're trading momentum, we don't have to catch every move, do we, Rachel? I think it's hard to remind ourselves. Traders tend to think that they need to be the first one through the door on a trade. It's not the case. You could miss the first 10, you could miss the last 10% as well and do just fine. You don't have to trade in advance of the move necessarily.
Exactly. I think it kind of speaks to a lot of traders just waiting for their level of confirmation rather than like buying a pattern breakout, buying a resistance breakout, using technical analysis as more of like a predictor is kind of what we try to stay away from as traders, and really waiting for that final confirmation, that green light to finally take that position or add to that position in that case. So I think a lot of traders will be paying attention to if we do have that confirmed breakout today, maybe using a percentage filter or multiple closes above that resistance kind of as their confirmation.
Okay, I like the sound of that. Basically what you're saying is define confirmation for yourself, whatever that might be. Is it a close over those levels? Is it a couple of consecutive closes? But have a plan that gives you the confidence to participate if a breakout does occur. That's a good process. Now, Rachel, we had some questions about some sector moves, and I was wondering if I could throw one to you because it's tied to yields, tied to rates, the potential for rate cut. And everything. And the question was tied to financials specifically. So let's talk about some of the movement happening amongst our sectors in the market. Yesterday, as I pull up the financials, which have been widely range bound. So if you're trading range bound groups like this, you're going to find some leaders out there. But the broad space has gone sideways. Now, in the midst of this, the news we got yesterday was out of JP Morgan, which actually said that things didn't look as rosy for 2026 at JPM. And interestingly enough, the stock took it on the chin yesterday. It's probably weighing a little bit on what's happening in financials, but that's a big, ugly candle there yesterday, Rachel, in JP Morgan.
Yeah, it's funny that we brought up this one because this is actually the chart that I covered in Market Movers this morning on the chart
Oh,
of the
wonderful.
day. And so, what I kind of noticed with this is JP Morgan, obviously it's kind of one of those generals in the financial sector. We have JP Morgan and the financial sector moving in this really range bound move for the last few months, maybe showing a little bit of indecision on like what's about to happen next with rates, because obviously interest rates are going to be place a lot of influence on the financial sector by like a lot of those like loan income, bank profits, things like that. So I would say based from the action of what we're seeing, maybe some uncertainty as far as the future direction of rates in this case. But yeah, JP Morgan, it's a $30 range here, really from 320 down to 290 or so. And it almost looks like, I mean, right now we can't really say that this is a triple top pattern quite yet because we obviously haven't had that breakthrough of support around 290, but that's going to be the level that I think a lot of traders will be keeping their eye on in the long term and in the short term with this particular stock as one of the generals in the financial sector.
It's a big pullback. I think traders on the long side are comfortable with where it came to. They're not comfortable if it breaks the lower white support line that I drew in there. I think that changes things. That's a decent drawdown, another 20 points, maybe down to the 200-day moving average around 280, which would be an area to test, and yet not delicious if you're holding JP Morgan. Obviously, you don't want to see it give up 20 to that spot. I will point out that the commentary here was out of TD Cowen today, reiterating a buy rating following this, setting a price target at 370 after the Marion Lake, the CEO of Consumer and Community Banking, presented yesterday, made the comment about 2026, the expenses being a little bit higher for JP specifically, and that's what led to the drawdown to support. But I think a lot of traders would agree it did fall to support. Now the question becomes, does the short-term support hold? There's plenty of reason for that to believe that can happen. The other thing that's probably interesting as it relates here, Rachel, is the 10-2 yield curve, which while going sideways for the better part of the last 6 months, we are still in an uptrend here. If I carry this to 2 years, for example, you're going to see a pretty well-defined uptrend in the yield curve, and that's not a negative as it relates to financials.
Exactly. Yeah. I mean, we are seeing obviously this little bit of a range for, I mean, the majority of this year, but like you said, it's occurring within the context of that overall trend. We're still not making lower highs quite yet. We are still making higher highs, higher lows in this case. And maybe this is just kind of that level at support before that next move higher in this possible yield curve here. And I think financials are definitely going to be one of those sectors that a lot of folks will keep their eye on as far as if this bull market continues to develop, continues to really continue throughout the next year, next couple years or so, because typically we have bull markets with financials really being one of those leaders or definitely one of those major participants in the move with the overall market. So I think if financials break down here, obviously it'll be a bigger sign for the overall market, but things still, like you said, Kevin, remain to be intact here.
Yeah, it certainly looks like a proper structure for financials as it relates. I mean, sideways and consolidative in nature as the yield curve settles. But when you're looking at a group like financials that had in the last 2 years rallied into this area of highs essentially and spent the better part of the last 4 months, 5 months now in consolidation, we shouldn't be surprised by that. Again, remember, consolidations are not always negatives, right? It's all about context. And the fact that we rallied to new highs and then consolidated likely gives bulls some confidence. Let's look at that quickly on the weekly chart, Rachel. And boy, I mean, the more you back this off, look at it from the elevated view, that looks bullish as well. So let's not overthink things here, right? I mean, we can look at this pretty consistently and see that there's at least a proper backdrop for potential more bullishness if the traders are getting what they're wanting out of the Fed, that is at least. So obviously that remains to be seen. But I think the point here is consolidations after runs to the upside, commonly those are bullish. So we'll see if we can resolve the financial move bullishly. The industrial space is also in a bit of a consolidative move here as well, Rachel. And I'm sure you've been watching this, but is it industrials or is there a second group here maybe that's caught your eye this morning?
Yeah, industrials has definitely been one of those groups there, just because, and I kind of follow this one closely too. I know other traders do as well, just because industrials have had that kind of that highest correlation with the S&P 500 really over time. And
Mm-hmm.
this is another one of those areas that is really range bound here. And this could be due to, I mean, many different factors, but I mean, it looks like one of those areas that still, like you said, I mean, that overall trend goes from the lower left of the chart to the upper right. So this could just be another consolidation or accumulation period before a possible resolved move higher. But I definitely think this is going to be one of those groups to watch as well, kind of leading into some of this speak later today.
Yeah, look at that. You're just basically showing highs and okay, we've digested this big pop to the upside, which is substantial. If we drew that in, I'm curious to see from those lows in April to the peak we just made. My goodness, almost 40%, Rachel. That is an incredible bounce back. And you know what? We don't commonly get those percentage bounce backs if things are going to be denied immediately following. So there's some underlying detail here. And I think a lot, I mean, this doesn't necessarily, these aren't correlations that everybody's going to catch on to, Rachel. But the truth is, if AI is in the expansion phase that is being discussed, you're going to need to continue to build that out, both in the virtual space, but also in the physical world as well. And industrials will be a big part of that. So keep that in mind. If you're looking for reasons as to why industrials are moving, there are some big leaders in this space, everybody. If you ever wonder, about, well, where should I be looking and what groups do I need to be paying attention to? What stocks should I be doing? Don't forget your heat map can do a lot for you here. Boy, that GEV, that's let's see, that's GE Vernova, I think. That's a standing out. That looks like the brightest bulb on the on the tree today. Let's take a look at that one just because we're talking industrials here. Let's put GEV in there. Okay, so they made a breakout, Rach. Look at this. Talk about a lovely consolidation. And I mean, it took a while, but talk about trying not to forget the trend you're watching, right? Clear they got some upgrades today is what I've got. Oppenheimer upgrading them to outperform. 855 new price target. RBC Capital upgrading to outperform. Target at 761, up from 630. So they've had a good bit of news here leading them to the upside today.
Yeah, looks like a breakaway gap here where we had that gap up above that prior resistance, which is kind of that indicator of the start of a new trend here. So yeah, I would definitely say the trend is kind of aligning with some of the speak that we're hearing from analysts here. We have momentum really confirming that move, reaching overbought levels here. So it looks like there's definitely some activity and some demand in this name. And I think another thing to kind of watch too, I know we were looking at industrials quite a bit. There's obviously like some movers like this one in this space. I think another area that a lot of traders are watching too with kind of possible breakouts or areas of opportunity is the transports as well. So I think that's another area that we're kind of watching as far as just maybe opportunities created in the space of those industrials versus those transports and just maybe more rotation under the surface here.
Great call out. I did want to give everybody the understanding of at least why GEV was moving, and then we're going to come real quickly back to the transports. In addition to those announced elevated price targets, the biggest reason I see for the pop here is that their board of directors at GEV announced that they've approved an increase to their buyback authorization up from $6 billion now to $10 billion. So they just popped it 66% higher. That is a wonderful development for the stock's price, obviously. And some of the further comments are out of additional analyst firms. So again, JP Morgan raising a price target. In fact, JP Morgan put a target at $1,000 a share. Bank of America raised the target to 804. There's a lot of comments about overweight, but optimistic as well heading into 2026, 27, 28. Lots of optimism and bullishness as it relates to GEV on the headlines today. So that's why you're seeing such a significant pop in this one, almost 14% today. Now, Rachel, as it relates to the transports, on this daily chart, it looks cool. Great move out of this range, but really it's all about the weeklies, isn't it? And the fact is, we've got those industrials over here on the left and, basically trading at all-time highs on the Dow 30 and the transports finally making a short-term higher high. Now, it's not an all-time higher high, but it is feeling a lot better than it was when we were mired below what was resistance back here.
Yeah, exactly. We've had a bit of a divergence for quite some time in the industrials versus the transports. So it's kind of nice for bulls to kind of see the transports really kind of catch up here to the industrials here to give some of that Dow theory type of confirmation. So like you said, we are still a little bit from those all-time highs there, right around like 17,845 or so. But who knows, maybe this kind of some of these decisions will impact the transports as well as we see further rotation here into that space.
Yeah, this is one of those things that long-term investors might be watching for and could be using as validation for the bullishness in the broader indices here. Dow theory does go back about 140 years or so. That doesn't mean it's invalid, though, given the age. So, but pretty intriguing view nonetheless. And you're right, those transports have been really, really strong here. One other way to give thought to this is just to open up those industrials, Rachel, and maybe look at your things like freights, right? You've got your air freight and logistics. We pay attention to that. You've got your ground transport. So there's your Ubers and Lyfts, but also your truckers and rails, your Union Pacific, CSX and Norfolk Southern, along with Old Dominion and JB Hunt as your biggest ones. So if you're looking at a way to participate in transports, that could be an altered viewpoint as well. And I saw a good question in the chat here about my symbology, which I'm using over here on the left, the S&P 500 details, which give me my sector allocations. I wanted just to remind you all that the search functionality available to you here in Thinkorswim Desktop is wonderful. So if you start looking for certain symbols and whatnot, getting quotes, you can start to do that pretty effectively, right? Even from my page here, where we have the lookup tool, right from the drop down menu. So here I'll slide over to lookup, and a lot of you know this, but I use these Dow Jones symbols, and they start out with a $ DWC. And if you do that, and you just increase the number of results, you're going to get access to basically every one of these industry, sub-industry groups, etc. These are a wonderful way to just view a big group of individual equities covering a specific space. So don't forget to rely on your lookup tool here for a lot of it. And if you're wanting to alternatively look through basically sectors and industries, our public watch list offers just that. So right now I'm highlighting just the sector indices, the 11 domestic US sectors. But if you wanted to see all of the industry, sub-industry groups, you could do it as well. As you can see, it's pretty substantial here. I'm constantly enthused, Rachel, by the awesomeness of Thinkorswim Desktop. I've only been using it for about 2 full years now, but I'll tell you, it's without a doubt the best platform I've ever utilized.
Yeah, it's a great one. There's obviously a ton of information in here, and it's almost like you can never fully know the entire platform because there's always something new to learn. But yeah,
Yes.
especially with these different groups here, I mean, in the sectors and industry space, it's kind of a nice way that traders can just kind of cycle through some of these charts, kind of going down in a watch list, looking for opportunities, and that, like I've said multiple times in this show, just that rotation that's kind of occurring under the surface, not only from sector to sector, but also from industry to industry within some of these sectors as well.
Good call out. Okay, Rachel, let's wrap it up here with some stocks in the news this morning. What do you say? We've got a few more. We've touched on a couple today, obviously, from the headline side of things and upgrades to GEV, but there was another upgrade on PepsiCo. And, I don't focus a whole lot on Pepsi, but, what's interesting about the timing of this one is that there may be a bit of a development underway here as the downtrend might be in process of breaking. They were upgraded at JP Morgan to overweight from neutral, a new target at 164 up from 151. What are you seeing on the chart?
Yeah, I see a few things on the chart. This has actually been one that I've been following for a bit because it's creating a few of these possible patterns here. I mean, just from September, those highs in September to really where price is right now, it's been forming this coil or possible triangle shaped pattern here. And then also where you're drawing that line right now, that's kind of the neckline for a possible inverse head and shoulders type of reversal here. And we can see that triangle type of pattern almost looks like the final rotation or the final formation of that right shoulder there. So in this case, it looks like a bullish reversal kind of set up here for the future for PepsiCo.
That's a great call out. I'll tell you what, when I see a chart like this that has so much going on and so many tails and back and forth, it's difficult to see it. But when you mention it, yeah, I can pull back and start to see the levels you're talking about. It's a little easier on the weekly, but boy, does that now start to really present as good resistance. That's, by the way, is the 100-week moving average up there, everybody, in gray. And if nothing else, Rachel, boy, a trader could look at this and say, yeah, a break through the red line and the 100-week would be a significant longer-term development, wouldn't it?
Yeah, definitely. I think that's definitely going to be the area that a lot of long-term investors here will be watching. And I know Pepsi is one of those in the staples space. So it'll be interesting to see if we do kind of have an overall type of reversal here in Pepsi, but also maybe in staples as well.
Good call out. Staples has just been really underwhelming here. This thing just can't get going. And I say underwhelming, but it's actually if you're a bullish trader, you're probably feeling okay by it because it speaks to the idea that traders aren't taking money from volatile or risky positions and risk on scenarios and adding it to risk off yet. So the fact that we've seen a downtrend here is probably optimistic as it relates to the broader market. You don't want to be led by staples positions in uptrending markets. We want to be led by enthusiasm and technology and so on and so forth, right? That's what we really would prefer. I also had an upgrade this morning in AbbVie, which is in that healthcare space, of course. Let's pull up AbbVie real quickly here. HSBC upgrading AbbVie to a buy from a hold, a new target at 265 up from 225. And I'm not sure I've said it yet today, but just be mindful. Price targets, whether that's analyst offered or measured move, they're never a guarantee to be achieved, but we utilize them just for purposes of understanding what's happening with the trend. Can't say that the market's all that, excited about AbbVie's upgrade at HSBC today.
Yeah, it looks like it's more of a little coil, still almost hovering in between this zone here, really between like 240 and 210 or so. So it doesn't really seem to be reacting too much, but almost like going through this coil or type of compression in this stage of this long-term trend.
Good call. All right, Rachel. Well, we're going to have to wrap it up. We're at time, everybody. We really had a bit of a wide-ranging conversation today, more so than usual, but it's because I got to have a follow-up chat with my friend Rachel here, and it's been great having you, Rach. Thank you so much for being here today. I really appreciate it.
Thanks for having me.
Of course. And to all of you, we really appreciate you all joining, of course, as well. Now, one thing I want to remind you about is our upcoming 2026 outlook, the 2026 market outlook. It's going to be actually hosted on the Schwab Network. So heads up to that, everybody. That is Thursday evening, 5 p.m. to 6 p.m. You're going to be hearing from the Schwab specialists. So you'll hear from Kathy Jones. You'll hear from Michelle Gibley. You'll hear from Liz Ann Saunders. And it's hosted by our friend Joe Mazzola. So make sure that's on your calendar, everybody, the 2026 market outlook. Make sure you're following the three of us on X. If you liked our conversation today, hit that thumbs up button for us down below, as this will get reviewed and archived and get into the list and available for additional viewers. That'll help us out quite a bit on a replay basis. So really appreciate y'all joining. Stick around for more from us today. We look forward to catching up with y'all again real soon.